Hey there, my name's Curtis Lucas and you're watching Empire Building. In this episode, we got to talk about what just went down during the Federal Reserve press conference with Jerome Powell today. As I've made no secret of it, I've been bearish for quite some time, and the initial reaction to the Fed decision that came out was as expected. The markets began to sell off and things looked like they were about to get quite ugly. But then when Jerome Powell took the podium and began to serenade us and give us that warm, fuzzy feeling, the markets made an about face and surged back to new highs. That was a remarkable change in sentiment. And I mentioned in my last video that there's a chance that the market will respond favorably to words. But if that were to happen, it wouldn't change my view on what exactly the data is telling us. Because we already had the data. The market was just reacting to the words that he was saying, which to me is about as clear a sign as you're going to get that it's most likely a bull trap. Now, obviously, as of the time I'm making this video, there's no confirmation of that quite yet. What's most remarkable to me is just yesterday, near the beginning of the trading session, the NASDAQ made a new low, broke the old low, and actually bounced off a former low that I was thinking might provide some support. I'll have to go back a little bit longer on the time scale here. But you can see the low that we bounced off almost perfectly matched the low we formed back in May of 2021. So it did seem to me at the time to be a technical bounce. But it also coincided with maybe some anticipation as to what was actually going to happen at this announcement by the Federal Reserve and Jerome Powell's statements. But as you can see, we are still in a downtrend. Now, this line here, to be honest, is slightly adjusted from where it was before. So there is a technical breakout there. But I also have to point out that this line had been moved once before. We used to be right around here. And we had a technical breakout once before that was followed by a severe sell-off. So I would suggest that we're not out of the woods yet. And the fact that this was a reaction to words that were said instead of the data itself is not something that fills me with an overabundance of confidence here. I've seen a lot of people on Twitter getting very excited that they think that this is somehow go time and that Jerome Powell is basically telling us the coast is clear. There's nothing to worry about here. Or is it?
You said clear.
I said it looks clear.
Well, what's it look like now?
Looks clear.
Obviously, these are the types of moves that are impossible to predict. But when they happen, if they defy logic, you really have to ask yourself what's really going on here. And I have to strongly caution against trading with market sentiment. It can be quite fleeting and incredibly misleading. I've also come to realize that Jerome Powell is very, very good at what he does. He's very, very good at giving us the warm and fuzzy feelings. It's not the first time that he's done this. Remember when they kept telling us that this inflation that we were experiencing was all transitory and it wasn't going to stick around?
Our expectation is that these high inflation readings that we're seeing now will start to abate, and that's what we think, and it'll be like the lumber experience and like we expect the used car experience to be.
In today's meeting, when Jerome Powell was asked about the likelihood of their policy decisions leading the market into a recession, this is what he had to say.
I guess I would start by saying that, in my view, the probability of a recession within the next year is not particularly elevated.
Now, I'm not pointing this out to throw shade at the guy. He's got a very tough job, but people are not appreciating exactly how difficult a situation that the Fed is in right now.
I mean, the assumption that the Fed is going to raise this year to almost 2%, raise next year to 3%, and there'll be very little economic repercussions or very little impact to markets, I think is highly misplaced.
This new phrase that gets thrown around a lot, that the Fed is somehow going to engineer a soft landing, is, in my opinion, ridiculous.
People talking about this Federal Reserve orchestrating a soft landing. I don't think this Federal Reserve could orchestrate Don Giovanni if Mozart was playing the piano and Enrico Caruso was singing tenor. What am I missing?
Well, yeah, what he laid out, again, is what he hopes to take place. But again, because I talked about the interrelationship between monetary policy, markets, and the economy, it's almost impossible to have a soft landing.
And a 25-point basis hike is going to do little to nothing in the face of the level of inflation that we're going up against at this point. So as I've been saying all along, these type of market conditions that we're in are not the type of market conditions that send us to new all-time highs. It's just not possible. And as I said, this is not about timing the market. It's simply managing your risk. I'm not saying sell all of your positions because we're crashing down. I actually don't know that. But what I do know is that there are persistent risks in this market, and we have to account for those. We can't just bury our head in the sand and pretend that Jerome Powell is just going to save the day. That isn't how this works, and it's not his job to keep you in the green. So my take on this remains: size your positions appropriately. Your position should be no bigger than an amount that won't bother you if for some reason it should get cut in half in the next 6 months. The way I see this is that if something like that was to happen, then I should be excited about it and not fearful of it. And that's the frame of mind that I've used when trying to size these positions. If it doesn't happen, great. But honestly, the best case scenario that I can see in these markets as they exist today is that 6 months from now, we are more likely to see prices at or below the prices we're at now. Certainly not back at new all-time highs. I know that this is an unpopular opinion. I know this because despite what I thought in my last video, that the subscription count continues to decline. People don't want to hear this, but I'm going to keep saying it because it's what I understand to be true. Now, there is obviously the possibility that I too can be wrong about this. I do recognize that, which is why I haven't completely exited all of my positions. I have to account for the probability that I could be wrong. And if I am, I'm perfectly comfortable with that as well. This is what I call risk management. And this is exactly the kind of environment where we need to be aware of those risks. That's it for this one. Now let's get back to empire building.